markets, speculation, and risk. This is the Chat with Traders podcast, hosted by Aaron Fifield.
What's up, everyone? Aaron here. Welcome to episode 210. Allow me to introduce you to my guest, Ryan Hasson. Ryan's a senior trader at Kershner Trading Group / SMB Capital. He joined the firm's New York office in 2016, although he's currently remote from Cape Town. Ryan may be best described as an intraday equities trader. However, he'll also put on swing positions when there's good reason to. So I was actually really keen to learn more about how he works these multi-day trades in hot sectors and in stocks with really big catalysts. So we actually spent a good part of this chat just stepping through Ryan's swing strategy. This segment starts around about 20 minutes in. Prior, I asked Ryan about his path to becoming a prop trader and his early developments. And right at the end, Ryan shares some of his daily habits, routines, etc. Hope you dig the episode, folks. I present to you Ryan Hasson for episode 210. We won't spend too much time on this. I mean, I'm very interested in hearing about the swing trading part, and I'm particularly interested in that because from what I understand, you're predominantly a day trader. So I'm interested in what gets you interested in taking swing positions and how you go about that. So we will get to that, but just briefly, prior to becoming the prop trader which you are today, I believe you've been doing that for several years now. What was your market experience before all of that?
Sure. So yeah, I've been trading with SMB KTG since 2016. Prior to that, I had very little experience in the market. Born and raised in Cape Town, South Africa, went to school here, studied here, got my degree here, and sort of in my mid-teens, just by chance, really, around the dinner table, picking some things up from discussions and hearing special guests on CNBC, Bloomberg, analysts, investors, portfolio managers, etc., talking about the markets. That all sparked interest, and I was fascinated about investing, and I wanted to know more about it. And so in my mid-teens, I just started doing some research. I started reading a couple books, and as I learned more, I started asking more questions, and I wanted to know more. And so I just continued to do more research. I set up some coffee meets with people in Cape Town that were in the industry just to find out more, very casually. And I really started to grow a liking for investing. At the time, I didn't know much about trading, so that wasn't even in my head at all. And then, in my late teens, my friend, a few years older than me, had started working at a prop firm in Cape Town, and he started sharing a lot of what he had learned with me, and that just sounded amazing. It sounded like the greatest job I'd ever heard. Challenging but rewarding, and it really pushed you to the limits. Allowed him to find out a lot more about himself than he thought he would, psychologically and emotionally, which it just all sounded really cool. And so he actually met someone from SMB Capital came down to work at their firm for a bit, and he met them and he told me about them, and he said, if you've mentioned before you want to go to the States once you get your degree. And if you are, showing interest in what I do, there's this firm, SMB Capital KTG, through a joint venture. They're in New York, and you should look into them and possibly apply. It's a really great firm, great training, great traders, partners, etc. And so just keep it in the back of your mind. And so I did some research into the firm, watched some of their videos, and spoke with some people online on Twitter, and decided that that's exactly what I wanted to do. So, the next thing for me was getting some experience and building up my resume and obviously completing my my degree. And so while I was studying, that was the main focus. The goal was, once I finished studying, to move to the States. If I got the job at the firm or a firm of similar nature, and start trading. And so for the next 3 years, while I was studying, I started investing locally on the Johannesburg Stock Exchange. Also worked part-time, and also started a entrepreneurial venture, a business with a friend, and really just to build up my resume and get some practical experience as well as the degree. Everything I could to help me stand out so I could get the job. And eventually I got the job after going through their hiring process. Yeah, I booked a one-way ticket to the States, didn't think twice, arrived there on my first day and quickly found out that I had no idea what I was doing.
Yeah, I bet. What were you studying at the time? I don't know if I missed that.
So I got a undergraduate degree, a Bachelor of Commerce, specializing in financial management.
Okay, cool. And you said you made some investments on the Johannesburg Stock Exchange. Do you recall what some of those investments were? Like, how did those go? What was your first?
Yeah, so basically, when I first started learning about investing, mid-teens, the idol was Buffett, and so the first couple of books I read was The Value Investor, The Intelligent Investor, Common Stocks and Uncommon Profits, and as well as reading a bunch of material online. And so I was just very naively trying to identify value stocks, local stocks listed here, try and diversify and apply the 15 principles essentially that's spoken about in Common Stocks and Uncommon Profits to the companies listed on the JSE. And so some of the investments were South African breweries, Aspen Pharmaceuticals, Satrix 40, ShopRite, Steinhoff, actually, which performed well, ironically, because what happened a couple of years ago. Yeah, those are the ones I remember off the top of my head. And honestly, looking back, I thought I knew what I was doing, but I had no idea what I was doing. I got very lucky, and it actually, the little portfolio, if you want to call it that, performed quite well. And I think the excitement of that also further sparked my interest in wanting to know more about this industry. It also helped me realize that I didn't want to just invest and hold long term. I wanted to interact with the markets, actively and every day. And that's really why I started looking into day trading predominantly.
Yeah. Okay. So your early experiences were all very much longer term investments is probably the best way to categorize it. Yeah. So this is pretty wild what you did. Like you got on a plane, you headed to New York, one-way ticket. You had no experience day trading prior to this, yet here you were on your way to sit on a trading desk. What was your first impressions when you arrived there? I imagine it was somewhat of a shock, or it surprised you in some way. Tell us what it was like.
Definitely. So, well, I guess to go back. So growing up, I would come to the States quite regularly. My father and mother, on both of their sides, a lot of family members live in the States. So I would visit frequently. And so I was very familiar with New York. So there wasn't a culture shock. But when I joined the firm, like I said, I realized I had a lot to learn. I joined with 9 or 10 other people, and they all seemed to know so much more than I did. And at first, I was overwhelmed. I knew this was going to be a huge challenge. They just from a technical side, fundamental side, their overall knowledge of the stock market, the US market was just head and shoulders above mine. That it was quite daunting. And so at first, it seemed like I was at a bit of a disadvantage. But then, I came to realize that as a new trader, someone that's just got a job at SMB and I had the characteristics in terms of competitive, up for a challenge, and I knew that this is what I wanted to do. I wanted to succeed. I came to realize that I was actually in a good position because I was in a position where I had no bias, no preconceived notions, and I was there to learn from traders that have already achieved what I want to achieve or are doing what I want to do. And so I was able to very quickly absorb, all the lessons that I learned in those 6 months like a sponge. And I think I honestly think I was in a better position arriving there not knowing anything than if I arrived there, with my own strategies or idea of how to make money in the market. So it's funny how that turned out, but that's, I think, a big part of why I'm still trading and have been successful is because I joined the firm not knowing anything.
Yeah, yeah. It is funny. It kind of goes both ways. It's like some firms really like that you have experience before applying, and they really value that. And then there's also, the other way of looking at it, and this is kind of how you got your foot in the door, I guess, is like having no experience, so no bias, no preconceived notions. Yeah. But what sort of things were you trading in the beginning? And this is going to lead us into, obviously, the sort of things you're trading now, but where did it all start for you?
Sure. So in the beginning, because I never knew who I was as a trader, I decided that I was going to trade very small size and I was going to trade everything. So by everything, I mean I was going to trade large, medium, small caps. I was going to trade on the long side, the short side. I was going to trade stocks in play, so stocks that have elevated R vol, breaking news trades, mean reversion trades. I was going to trade low floats, IPOs, and everything with small size. And small size because, all the senior traders had told me that, as a new trader, you're going to go from losing to losing less to breaking even to making money to making more money. So I decided, well, by the time I figure out what I'm doing, I don't want to have a hole. So let's experiment with everything for 3 to 6 months. Let me record all that data. And after 6 months, I'll be able to analyze that data and figure out, or I guess let the data tell me where there are some signs of edge in my trading, be it long side, short side, both sides, in small, medium, large caps, what time of day, and what particular setups, etc. And so that's what I did. And every day I would playbook the best trades that I made, the best trades that some of my peers that I started with made. I would do anti-playbooks so I could document what I did wrong, which was more, I had more of those playbooks than the good playbooks in the first 6 months. But I learned from that. And then asking the senior traders, hey, what did you trade? What did you do well today? And then document that and sort of analyze their trades, so I could kind of pick their brain in that sense. And then after 6 months, I analyzed, give or take 6 months, I kind of looked through all of my data on TraderView, and I found that I wasn't making money trading large caps. I wasn't making money trading, large caps earnings or breaking news, but I was making money consistently trading low floats and specifically on the short side. And so I decided that for the next 6 months, I was only going to focus on low floats, and I was going to really learn everything that I could about trading low floats, from building out in-depth playbooks, documenting, high edge and probability setups. I was going to understand the psychology behind the moves, the technical side, fundamental side, how to read the SEC filings, understand different forms of dilution, et cetera, et cetera. And so that's all I focused on, because I wanted to now show that I had edge. I had found edge. I was consistent. I could be profitable and slowly bump up my size and risk in the process. And so that was the next 6 months of trading. And so that's what my first year looked like.
Can I just jump in there? So that first 6 months was very much a discovery period.
Totally.
And you kind of honed in on playing the short side of low float stocks.
Correct.
Around that 6 month point. What did your trading results look like in the second half of that year? So the next 6 months.
So first 6 months, I was just consistently taking small losses. And then the second 6 months, my curve sort of flattened out, and then it started to uptick. And so I gained consistency.
Was it obvious, or was it, a bit lumpy?
It was
sort of still.
It was very obvious. First 6 months, I went from basically, losing 3 out of 5 days. 1 week maybe you get lucky, you have a good week, but mostly it was every week 3 days I'd lose. And then the second 6 months was, 3 out of 5 days of the week I would be profitable, and the other 2 days I would manage my risk well and the losses weren't substantial. That was my first year. Then my second year, I said, okay, well, I've proven now for the last 6 months that I do have edge in trading low floats, and so now I need to make a living trading low floats. I need to form a consistent stream of income as a trader before I look to revisit some of the trades and strategies that didn't work in the first 6 months to build up multiple streams. And so the next 6 months was all about sizing up, managing risk, and really doubling down on my rules and my processes in order to keep my emotions in check while I sized up, and how to not let that size mess with the way I manage my trades. And so the next 6 months was really just fine-tuning my strategy, my risk management, my process, to go from having decent weeks to having really good weeks. And when you get that A+ setup once a week, not only to be able to capitalize on that, but to also recognize it in real time that hey, this is a trade that could make your week. This is where you need to put on 3 times the risk that you did yesterday. Because my stats tell me that I have a lot more edge in this setup. It has a high probability of working, so on and so forth. And so it was just fine tuning for the next 6 months, and then I think the next 6 months probably takes us to more of swing trading.
Okay, can I just jump in again? I feel as though I should ask you about any systems or processes that you use to assist you with sizing up in that second year?
Sure. So, some very small, simple things. So basically I took P&L off of my screen to sort of disconnect me from the number. And when sizing up at the firm, the way I thought about it wasn't that, okay, if I'm, risking X, now I'm risking Y. I just thought about it as a percent of my risk. So if I was, risking 30% of my stop loss on the day, then I got a risk bump. I would still be risking 30%. So the percent would always stay the same, and that's how I thought about it. And that helped me. So one, I disconnected myself from the P&L. I took it off of my screen, and two, I never thought of how much I was risking in terms of, the dollar amount. I rather thought about it as a percent of my stop on the day. And so that stop was growing every few months. My risk that I could take each day would grow and grow and grow as I would get better as a trader. But the percent always stays the same. And so I just applied that principle, and that made it fairly easy to size up. With that being said, sizing up has been my biggest challenge as a trader. To feel the pain of sizing up and taking bigger knocks, and not letting that sort of mess with you emotionally. And so these are just a few things that I do to try and curve that a little bit.
I presume the max loss on a day is that amount is controlled by the firm, but is there some sort of formula for
Correct.
how that's adjusted?
Adjusted in terms of how it gets bumped up?
Yeah, exactly.
Yeah. So, when you start and when you're a new trader, you have to show that you can be consistent, whether it's for a couple of weeks or a month. And then, your risk, which is very small at that time in your career, gets bumped up quite frequently. And then as you become more of a developed trader, a consistent trader, a senior trader, conversations take place between you and the risk manager. And if you've performed well, if you haven't, I would say, disrespected your stop or your rules, then you frequently do get bumps. If you're performing and often making whatever your stop is, if you make that in P&L regularly in a week or on a month on particular days, then that warrants a risk bump. So that's pretty much how it goes. It's different with each trader, as each trader has their own strategies, and some strategies requires a bit more flexibility. But for me, it's more controlled in the sense that if I continue to perform and size up, and I need to take more risk as I'm sizing up, then the risk needs to be adjusted.
Right. Okay. That makes sense. So tell me a little bit about how you've leveraged the skills which you developed from initially shorting low floats and how you've kind of built out your playbook into other strategies in other areas of the market.
Sure. So yeah, after like a year and a half, 2 years, I realized that I had sort of boxed myself in. I had become a bit of a one-trick pony. I was just trading low floats on the short side. There were other traders that were trading them only on the long side. There were traders that were once on the backside of the move, they would swing the low float short for a couple of days. And so I realized that I don't, in order to make it in the industry, to be not for a few years, but make it sustainably as a career, I needed to get out of that box and learn some new strategies and be more relevant for when the market adapts. And so the first thing I decided to do was, okay, I'm already trading low floats, and say a low float goes up 200-300%, it tops out, puts in a lower high, and cracks below VWAP. I'll be in on the lower high, and I'll catch the move to the downside to VWAP. I'll hold it till the market closes, and maybe if the stock went up 300% on the downside, I'll catch 20% of the move. But then the following day, that low float would trend lower and retrace 30% on lower volume than it did the previous day. And then the third day it would retrace lower. And so I realized that, okay, I'm catching day one, which is really the tough money when the low float first tops out, puts in a lower high, or, consolidates at VWAP, cracks VWAP, multi-day VWAP, whatever the setup is. But I'm only in on day one. And then, tomorrow's a new day. I look at a new stock. So that was the first change. I decided, all right, I'll continue to do what I'm doing, but I'm also going to, in a separate position, short the stock once I have confirmation that we have gotten a change of character and it's now the backside, and I have a level to trade against. I'm able to manage my risk. I'm going to put on a core position, and that's going to be a swing trade. And so as well as trading it intraday, I'm also going to put on a swing trade, and I'm going to be there for the meat of the move over a period of 2 or 3 days. And I'm going to, be a bit patient, because that's, I feel, where the real money is made. And so that's what I worked on next. With that came a lot more work. I had to try and eliminate as much risk as possible, in the sense that I needed to identify when it was appropriate to put on a swing position in low floats, when there was high probability that the stock was going to retrace 50 or 75% of the up move that it had just made, when there was a high probability that they were going to raise capital, so on and so forth. And so I had to do a lot more research, and I had to initially start with small size when I started swing trading them overnight, until I got comfortable and fine-tuned that strategy. And then I started, sizing up, just like I did when I first discovered my edge with low floats, started sizing up in that strategy. And that's now become, probably one of my best strategies. And it's not just with low floats. I then leveraged the skill from initially trading low floats actively on the short side to trading them on the long side as well now, which is greater in the current market than it has been historically shorting them, trading them on the long side. Then I went to shorting them as a swing trade, which then also kind of transferred over to shorting OTC stocks, swing trading on the short side as well as on the long side, to also then applying these skills and leveraging those skills to trading, overbought, oversold, large caps, IPOs, Neo, Tesla, for example, those type of large caps that are overbought and give you those intraday opportunities to ride momentum on the downside, or even a short squeeze to the upside. So really it's transferred over to various strategies, but it just started, like I said, with low floats, and then swinging them on the short side to now kind of in all areas of the market.
Yeah, it's really interesting because, I myself am trading around intraday, and often you're trading, the same stock day after day for a few days. And like you said, you're kind of when you sit back and you look at the bigger move, it's like you're almost making it harder for yourself. Like you're taking out little bits here and there, where if you take a step back and look at sort of the theme which is playing out here, there's, potentially a lot more money to be made just holding on to this thing for a little bit longer.
Exactly.
So how do you decide when it's appropriate to swing?
So it's difficult to say because each trade has its own story. So if I'm trading a low float on the short side, I'll give you one answer. If I'm taking advantage of the current theme, which we have with low floats with some OTC names, it would be on the long side. That would be the blockchain Bitcoin theme. So I'll give you an example there. For me, it's all about risk reward and probability, right? So if it's not entirely, when I swing something, about being right or wrong, but it's just about having great risk reward and a probability. The stats show me of it working, but mainly it's risk reward. So with the Bitcoin and blockchain theme right now, there's been a lot of opportunity on the long side with some small, medium cap and also OTC names. There was one name I actually just closed out this trade end of last week. It was the biggest trade I've had in my career. And this was a Bitcoin OTC name that has been consolidating for months. And when Bitcoin got above 20,000, this broke out of its daily range and consolidated above resistance. And so basically for my swing trades and for specific themes in the market, which is just relevant for this particular trade, but many other trades I've taken, which have been similar, I'll have a sort of a market window on my screen, and that will be for, whether it's all the blockchain Bitcoin stocks or marijuana was a theme, or, the COVID vaccines were a theme, think INO, SRNE, etc. And so for blockchain Bitcoin, I'd identified over 10 stocks on NASDAQ, as well as OTC. And every day I would flick through all the charts and just see how they were acting. Now, with this position, one of its peers, similar stocks, had made a move well before this stock made its move. That one was HVBTF, another OTC stock, which started its move, I think, six weeks ago or so. That went from 50 cents to $2.50, close to $3. And then this stock that I was watching was holding above resistance. So essentially it was trading at 20 cents. I knew that I was wrong in the trade at 10 cents. So my risk reward was really good based on where I believed this could go and where some of, its peers had gone. And so I put on a position about 2.5 weeks ago. And as long as it would hold above resistance and not get below where I would be wrong, I would hold my position and even look to add if it broke above the space and took out the previous pivot high. And then, about a week ago, it started its move. It broke out. I added. And what these OTC names and some of these swing positions provide is just immense risk reward, where, again, you're able to risk 10 cents. And this particular stock went from 20 cents to $1.58. And so that's when a lot of my swing trades, the focus is, it's on theme plays, whether it was, it's the first theme that I ever saw was with the shippers, end of 2016, dries, tops, ships, ESEA, I think SEAS, another one, GLBS, DCIX. Then we had blockchain Bitcoin, we had the marijuana theme, we've had COVID, all the vaccines, and now we have Bitcoin blockchain again. And so it's identifying stocks that have a real good chance of moving in this theme, gaining a bit of euphoria and attention. And so catching them on the long side, which in this particular case, it was a 3-week trade, and then flipping on the short side once, if you will, the bubble with these particular stocks bursts, and then holding for the retracement, which could also be a 2-3 day or 1 week position. Stocks go down a lot quicker than they go up. And so that swing would be a bit shorter.
This might sound like a really simple question or a really obvious answer, but I think some people might appreciate me asking this. How do you get a sense for when a sector is beginning to heat up?
It's a really good question. So what I do is, and I'll give you a pretty simple answer too. It's from talking to other traders and sharing ideas and hearing the ideas. Often all the traders, when many traders start mentioning the same symbols or the same theme or sector, that something, there's just a lot of attention, a lot of traction. Looking on Twitter, how many people on Twitter are starting to talk and get a bias around particular stocks and a sector. Having my certain scanners and filters and seeing a bit of a irregularity of how many names within one sector are performing well on the day, and also looking at the volume traded within a basket of stocks in a particular sector. Are they all trading abnormal volume? Does it look like someone is starting to accumulate a position? And then keeping an eye on those stocks for a couple of days until you have absolute confirmation that, okay, this is turning into something. Obviously, with this theme, Bitcoin, that was really obvious because it's Bitcoin and the whole world's talking about it. But with other themes that aren't so obvious, it would be what I just mentioned. Talking with traders, having all of the relevant stocks in a basket so you can track them each day and see if they're trading abnormal volume and percent gains on the day, and just keeping track of them.
Yeah. So can you just go through this a bit more? I think you did touch on it in your previous answer, but once you identify that a sector is beginning to heat up, there's some attention coming into this. How do you figure which individual names are potentially good swing candidates?
Sure. So the first thing I look at is, has this particular stock run before? If it did, where did it go? Post-run, was there any dilution? What's the current, float size, outstanding size? So I look at all the technicals. I look at the company itself. I look at if they put out any press releases recently. I look at the chart. I look at, is there a favorable setup there? And then I look at stocks similar to the one that I'm looking at and, have any other stocks started moving yet? And then I just try and gauge the overall psychology around that particular stock and other stocks in that sector. And so that's typically where the process starts. And then, figuring out how high the stock can go is, a whole nother discussion. But, identifying it is as fairly simple as that. But at the end of the day, it comes down to, the technical setup. Is there a good risk reward setup here? Am I able to manage my risk? Is there enough liquidity to get in? And if I'm wrong, to get out and not be slipped. And so, even if something looks great, I'll often pass on trades if, it's just not liquid enough. So it's got to tick, 10 boxes.
With the crypto example, you mentioned one name, I don't recall what it was, which you said had already started moving. So I guess that was kind of a leader in a sense. And then the stock which you actually traded, it sounds as though that was kind of lagging behind. Is that something you normally look for, like is to buy something which hasn't moved yet, which you think will follow the leaders in that sector?
Definitely. So what I learned early on, just for these sort of theme plays, was that you always get, you get the leader. So you get the first stock that goes and pulls up other stocks in that sector with it, and then you get all the sympathy plays. So all of the other stocks in that sector start poking its head up because the leader's gone. You don't want to buy that one because the risk reward's not there. It's already up 50%, 100%, 200%. So everyone will turn their attention to names of similar nature in that sector and start buying those up. So, I first saw this with the shipping sector. I think it was end of 2016 when Dries went. Once Dries went, that went from a couple bucks to $100. That's when all the sympathy plays started. And on the long side, it's a lot easier. to catch the sympathy than it is to catch the leader, because it's usually after the fact. And on the short side, it's the same. When the head of the snake gets cut off, like Dries did, then all of the sympathies fall as well, sort of like a house of cards. And so when the leaders, the couple leaders in the OTC market started to go, I immediately had confirmation that this is likely going to be a sector move. It was tricky because we had this move 2017, 18, when Bitcoin first ran, and all of these stocks had ran before. So I wasn't sure if maybe there was too much supply for these to be up, too many bag holders for these to go up again.
Right.
But that wasn't the case. So I waited for confirmation, which happened in a few of the names. The name I mentioned, HVBTF, was just one, but that was a fresh one. And so I waited for some confirmation. Once I had that, it came down to me knowing exactly which couple stocks I wanted to buy if Bitcoin were to hold. At this point in time, Bitcoin was around 23,000. Bitcoin were to push to 30,000, and these stocks that I was holding were still holding above resistance. I would then want to get bigger and let the trade sort of play out. And so that was my thinking there.
Okay, I'm interested to know how you manage risk and you size differently on swing trades compared to intraday trades.
Definitely. So it all depends on, how much success I've had trading this particular setup in the past and how liquid the name is, and then the risk reward I have in the setup. So often when I take a swing trade, I risk anywhere from 50% to 100% of my stop, because I don't make these swing trades every week. I probably make one every couple months. And I'm very, very patient in that sense, and I only make them when I have sort of absolute confirmation that and belief in the trade. So when I'm trading intraday on a day-to-day basis as an active trader, it's usually about generating cash flow, making good trades, high probability trades, with maybe 10% of my stop on the day allocated to a particular stock. I say stock because I'll be trading a stock and I'll make 5 trades in the day on that name. So I'm in a sense trading the story behind that stock on the day and the momentum. So I'll allocate maybe 10% of my risk to a particular stock that I know I'll be trading that day. When I trade a swing trade that's A plus, I'll allocate 50% or 100% to that swing trade, which would take 1 week or 2 weeks to play out, depending on liquidity. That will determine, and risk reward will determine whether it's 50% or 100% of my risk. And more often than not, they offer superior risk reward. So not 3-to-1, which is typically what I look for on a daily basis active trading, but 5-to-1 or 10-to-1, and that's where patience comes in.
Yeah, on that subject, you are predominantly a day trader. As you said, you take these swing trades when the opportunity comes around once every, couple months. So there's you're probably somewhat ingrained to take profits quickly. I mean, are there any tricks which have helped you to hold on for these longer, bigger picture moves?
And that's a great question, because you couldn't have said it any better. I have in the past struggled with taking profits too quickly on swing trades because, like you said, each day I'm scalping momentum, or even if I have small swing trades on intraday, it's on for an hour or 2 or 3 hours. I'm taking profits pretty quickly. So before each swing trade, I have a clear plan. I know I have my if-then statements written out in front of me. And unless there's a change of character, I stick to that. So, for example, the particular trade that I just made last week, I said, all right, if it gets above 20 cents, the next target for me would be 40 cents. So I'm not taking anything off until we get to 40 cents. And at that point, I'll take off, for example, 1/5 of my position. Then the next target is X, Y, Z. And I just follow my trade plan. If I don't write it out, then as a person, I know that I might get a little bit too erratic or emotional about the position or about the P&L, and that will lead me to say, I'll just take off a 10th here, I'll take off a 10th here. Ooh, it looks like it's going up too quickly, I'll take off a 10th here. So it helps me to write my plan out before the move has even taken place, so that if it does happen, I'm not, twiddling my thumbs. I know exactly what I need to do in order to, stay in the trade for as long as I need to be until it completely works, or I'm wrong, I get stopped out, or there's a change of character and I need to just take my whole position off. And then, with intraday trading, I do something similar. Whenever I'm very active intraday, trading all sorts of stocks. Yesterday traded a couple small caps, traded as well Tesla, so large caps, and very active trading momentum in names. But I also have the tendency to take profits too quickly. And on the one side, it's a good thing because, if I get into a position and it starts working, I'll initially take off some size to cover some risk. And, the goal is to turn it into a risk-free trade. But sometimes it does more damage than good because the trade really works. And I'm like, shit, I covered 50% too quickly. I left so much on the table. So what I do now is I have special keys set up that when a trade does work, I just hit one key and it layers 5 bids. Say I'm short a stock. This key will layer 5 bids in 5 or 10 cent increments, depending on the type of stock I'm trading and the spread, to take off literally 1/15 of my size very quickly. And that just psychologically helps so that I know, okay, it's working. I've barely taken off size, but I've taken off something. And that helps me hold on for longer. Just a little kind of mind game I play with myself. One of the tech guys helped me set it up. And so I make use of that in almost every trade that I take.
Yeah, that's awesome. That's really cool. I'm always fascinated by those sort of little, those little 1% things, especially when it comes to technology, which traders are utilizing. With the swing trades, how do you manage concerns with overnight risk? Or is it just something you've just got to be willing to accept?
No, great question. So, if I'm short a low float, that's essentially where most of the risk is, because, a stock can go up, however much it wants to. It can only go down a certain amount. So a lot of research goes into it. And if I take a low float overnight, I'll spend a lot of time doing my own research, looking through the filings, doing some fundamental research, as well as talking to other traders for myself to have the confidence that, okay, the stock did run, it went up X amount, it has topped out, and there is a very high probability that based on the close it had today, it's probably going to gap down 5 or 10%. I doubt they're going to put out a PR. They've already kind of run that course over the last couple of days. There's a high chance that they're going to do an offering and just ticking all the boxes, essentially. What I also do is if I do take a swing trade, I'll never put on a short, just before the market closes. I'll never put on a fresh position in a low float just before the market closes. I'll always would have traded that stock intraday once it turns to the backside or on the long side as well. And I'll lock in profits. And then essentially I'll allocate what I've made in that stock as my overnight risk. So, I'll have a stop in place for 4 a.m. the next day. If it's above a certain price, I'll get out at a particular price, which will essentially eat up the profits I made the previous day trading it. Touch wood, I haven't been in a situation where I've taken a stock overnight short and it's gapped up, 100, 200% on a PR. And I think that's because I just do my research beforehand and, weigh up the probability of each different scenario playing out. And on the long side, the same applies on the long side. For that, it's all about, risk reward, essentially.
Yeah. That's quite interesting, actually, and it's probably something I should have asked you about sooner. So when you actually are putting on these positions, like when it actually comes to executing your entry for a swing trade, it's done during the day. Yeah. So by the time it comes to the close, you're already in profit on that position, I presume?
Exactly. So say you have a stock that goes from, $10 to $30 and, on the final day, the ATR expands and, previously it's been going up $2, $3 a day. And on the final day, the stock goes up $7 to $30. That's when you get the largest 1 minute, 5 minute volume candle, and immediately you get that kill candle. It snaps, it breaks below the 1 and 2 day VWAP, it retraces, makes a lower high. And then on multiple time frames, you get confirmation that, okay, the stock has topped out, there's a lower high, it's holding below the 1 day VWAP, looks to break below the 2 day VWAP. So everything aligns within the story and gives you the confirmation you need. At that point, I will put on a short position. And the same thing applies on the long side. If it's oversold, I'll put on a short position or a long position, and I'll say, okay, I would like to swing this if it closes weak. And if I want to swing this, I would want X amount of size, but I'd also like to catch the momentum move. So on the lower high, I think it's going to break below the 1 day, the 2 day VWAP, and go to, the open of this morning, just off the top of my head. And for that move, I'd like to hold X amount of size. So I'll put on both. I'll combine the size, or I'll put it on in two separate accounts at the firm. And as soon as the intraday trade plays out, I'll cover my position, but then I'll hold a core position for if the stock closes weak and I want to take it overnight, so that I can, essentially catch a gap down if I deem a high probability of that happening, and then essentially have that call the next day to trade around.
Yeah, nice. Something you spoke about just before, when it comes to closing out these trades, I think you described it as a change in character.
Yeah.
Can you speak to that a little more? What do you mean by a change in character?
So VWAP is a very important indicator that I use. So, for example, if a stock has been, say I'm long something and it's been holding above intraday VWAP predominantly each day, and it's been closing near the high each day, and the long trade is working. And this is maybe a 2 or 3 day position, or even an intraday position that I'm holding. If the stock then pulls back to VWAP and breaks below VWAP and trends lower, then that's a change of character. If the stock speeds up above VWAP and puts in, a topping candle, high volume bar, makes a lower high and breaks below VWAP, it's a change of character. So basically, it's identifying the way that the stock's been moving and the psychology in the stock, and if that no longer works, and if there's a huge change and the sellers, reading the tape, take control, and the stock's now making lower highs, or it's unable to reclaim VWAP, then that would be a change of character. And, I would then be wrong and I would close out the position. So that would be on an intraday basis, or if I was swing trading it, I'd be looking at the hourly chart and multi-day VWAP to identify trends and a change of character.
Let's just finish here with a couple questions around processes, systems, etc. Are there any daily habits or routines which you stick to?
Yeah, so essentially my day starts with me going through my pre-flight checklist, so my pre-trade checklist. And basically, I ask myself simple questions. Did I sleep well? Have I eaten well? Did I exercise? Am I feeling fresh? And is there any A+ opportunity on the day? And if I tick all of those boxes, then I know that, okay, today's a day to really go for it. Let's put on extra risk. So that's the first thing I go through, is just a checklist to see where I'm at and how I'm feeling for the day, and if I'm in a position to take risk on the day. That keeps me in check. The second thing is reviewing my trades from the previous day. If I have any positions that I carried over, going through that and maybe reassessing my trade plan, coming up with new trade plans for new stocks in play. I then speak with a few traders at the firm. We share ideas, bounce ideas off of one another and our trade plans. And then I look through all of my, by then I had looked through my in-play scanners, and then I look through some of my other scanners and filters to essentially alert me to any other opportunities in the pre-market that I might have missed that I should be paying attention to. So essentially just using that technology to kind of supplement and complement my strategy and give me some more eyes in the market. Throughout the day, I have some alerts set up on my phone, just some alarms every 30 minutes to sort of zoom out, remember the bigger picture. It can be very easy when you intraday actively trading to get sucked into the 1 minute chart, the tape. So I often remind myself to zoom out, look at the 15-minute, the hourly chart, daily chart, and just take stock of how everything's moving. That helps too. And then, I have sticky notes all over my computers, which pertain to rules for all of my different setups, from rules to 3 strikes and you're out. If I'm trading a stock and I've traded it 3 times and all 3 times it doesn't work, then that's it. Scrap the trade, scrap the stock, move on. To, other reminders, if a stock's trending above VWAP, don't short it. If a stock's in a range, don't touch it. If it's trending below VWAP, don't try catch a falling knife, et cetera, et cetera. So very, very rule-based and process-driven.
When you said speaking to other traders at the firm, it just reminded me of something I had in my notes here. And I think this is an interesting question. You rub shoulders, although maybe it's more in a digital way at this stage, as you're in Cape Town right now and not New York.
Yep.
But you are speaking with some very sizable traders, from what I understand. How do you deal with the natural tendency to not compare your performance to others?
It's a great question. And I know that, with everyone sharing their results online, it can be very easy to compare yourself with others. As traders, we all have growth mindsets. We all want to continue to grow, put up bigger numbers and results. But at the end of the day, how I deal with it is I just, remind myself that I'm competing against myself. And so the traders I talk to each day are, 10 times bigger than me. In my eyes, they're some of the best in the world. I don't compare myself to them because, they have their own journey, and a lot of them have been trading for a lot longer than me. Rather, I say to myself, well, if they're doing it and if they're trading at really the highest level, there's no reason that I can't get to that level. But right now, I'm just not there. So instead of forcing myself to use all the risk and size that I have, it's important to remind yourself that, and remind myself that it takes time. As traders, if you're doing well, you've gotten to this stage in your career by doing you and doing what works for you. And the only way you're going to get to the next stage is to continue doing what works for you and responsibly sizing up. And then eventually, you'll get to that level. But if you start trying to push yourself way too much and let the size and P&L drive your decisions, it's not going to work out. So I continue to remind myself that, and basically kind of reframe it and look at it in another way and let it motivate me rather than, bring me down that, these guys put up bigger results than me. I think it's amazing that there's some traders putting up the numbers they are, because if they're doing it, then there's no reason, all of us can't do it. And so rather let it motivate you, learn from them. That's what I do each day, and ask questions, and that's the best way to continue to grow and learn.
That's a really great answer, man. I love it. As we are at the beginning of a new year, right at the start of 2021, how do you approach goal setting for the year ahead? Is that something you do, or?
Yep. Something I do. Something I did just recently. Yeah.
So how do you think about, the goals and sort of targets you want to reach for the year?
So I do it in, I guess to summarize it, not from a, P&L perspective, but just from my trading performance last year. Last year was obviously a great year and a historic year for traders in the volatility that we had. So what I do is I ask myself, did I do a disservice to myself with any of my strategies? The answer was yes. I was too even though I did well, I was too comfortable in a lot of my strategies and positions that I took. I should have put on more risk and more size. It's kind of like what Andy said when he was on your podcast, Andy Kershner. He said, if you're going to sit in your seat the whole day, you might as well put on some size.
Right.
And I love that. And so I asked myself, did I do a disservice anywhere? because if you have edge and if you're consistently profitable and you're not making the most out of what you're doing, which is still within your wheelhouse, and you're not letting that affect your trade management, then you're doing a disservice to yourself. So that's the first question I ask myself once I have the answer to specific strategies and trades and opportunities. I then dive a little bit deeper and say, okay, on this particular trade and this strategy, I need to size that up by an extra 5 or 10% of risk, and I need to be held accountable for that. So I'll reach out to some of my trading buddies, to a partner at the firm or risk manager, and I'll say, please hold me accountable as well. I need to be held accountable for this. I need to make sure that I do it. So that's the first part of it. The second part will be my routine and process. How did that work out last year? Do I need to tweak anything? That can be from sleep to my filters, my scanners, to how I prepare, to how I review, what needs to change, what needs to be better. And then comes my P&L setting, my goal setting. I think it's very important to review and set goals for the year, for the week, for the month. It's imperative, just as if we were, we're all running our own small business. So, we need to have a tight leash on everything we do so that we can continue to analyze it on a daily basis to identify, any weaknesses or strengths.
Good stuff, man. Let's leave it there. We've run for about an hour now. If someone wants to find out more about you, I know you are on Twitter.
It is trader_RH94.
Okay, excellent. That will also be in the show notes. Ryan, I want to say, man, thank you very much for doing the podcast. It's been really cool to hear about your processes, especially the swing trading aspect from the perspective of a day trader. So yeah, appreciate you coming on, man.
Thank you so much, Aaron. It was a great privilege to be on. Thank you so much for the invite.
My pleasure. Thank you.
You've reached the end of this episode of Chat with Traders, but rest assured there are more episodes loaded with real market insight and zero hype on the way soon. So to stay updated with each great new release, subscribe to the podcast in iTunes, and we'd love it if you'd leave a rating and review. We'll catch you next time on Chat with Traders.